Hi, everyone. It is Thursday, March 5th. Welcome to another CNBC live stream. Now, every year, Morgan Stanley brings the biggest names in tech and the biggest investors on Wall Street into the same room for its TMT conference right here in San Francisco, just down the street from here. Every year, the vibe tells you something about where the market is headed. Last year, the conversation was all about AI's potential. Yes, AI will be big, but how big and when does it really arrive, especially the agents? Well, this year that debate is over. It's here. Dario Amodei told the room that Anthropic is approaching a $19 billion revenue run rate. Jensen Huang announced both OpenAI and Anthropic. He says they're going public. Companies replacing developers with coding agents and ripping out legacy software, not just talking about pilots anymore. But the euphoria is somewhat gone, and in its place, there are some harder questions. Software stocks, they have sold off this year. The cracks are even showing in the hardware trade, and the mega caps' historically pristine balance sheets, they're evolving into something else. Amazon is going free cash flow negative to fund its AI buildout. Alphabet issued a 100-year bond. There's volatility among the startups, too, with the government blacklisting Anthropic and Sam Altman trying to stem the outrage around OpenAI's decision to step in. So it turns out that AI arriving doesn't exactly answer the hard questions. It just raises more. To break it all down, we've got the perfect person today, David Chen, head of global technology investment banking at Morgan Stanley, where all the action was this week. He's the banker behind some of the biggest tech deals of the last decade. Dave, welcome. Do we have Dave's sound? Hold on, I think maybe.
Yeah.
Dave, do we have your sound? Okay, now we go. We got you.
Yeah. Great to be here. Thank you.
Slow week, right? You didn't see Sam Altman or Dario Amodei, any of these guys
at all this week. No, it's as you said, it's a real privilege at Morgan Stanley to just really be the epicenter of technology. We had, as you mentioned, Dario. We had Sam this morning, Jensen, Satya, among many other big keynotes. And I agree. Yeah, I mean, the tech industry, clearly one of the big themes here is caught between, I think, AI-driven enthusiasm and then financial discipline, as you alluded to. I think AI clearly dominated the conversation this week, every single one-on-one and fireside chat. But I think investors and executives are wrestling with how quickly does all of this massive spending will translate into returns versus this kind of like endless chase for growth. But I think it's pretty clear that AI isn't just the future of tech; it's the present here today, and I think no one wants to be left behind. Clearly,
right. And I was at the conference last year, of course, as were you, and it felt like there was maybe more questions, maybe a little bit more optimism last year, and the conversation was all AI as well. But tell me how that's changed from last year to this year.
Yeah, I think one of the big changes was, every company, you're right, every company, certainly if you were not an AI native company, I think there was a lot of optimism around how AI was going to help each company's, general and administrative expenses or sales and marketing expenses, and bringing in that technology to overall enhance the target operating margin of the company. So people were kind of talking about that. This year, I think that's kind of table stakes. I don't think investors really wanted to hear about how people are being more efficient with AI. I think they really wanted to hear, are you a beneficiary or are you a threat? Or does AI threaten your overall business? And I think companies this week were just a lot more frontal, Deirdre, with answering that question for investors, particularly if you're an enterprise software company.
Thank you. I was going to make that sort of segue. I mean, for enterprise software, it's more than are you threatened? Sometimes the question is, are you going to survive? Right. And you had I was talking about it this morning on, my CNBC TV segment about how, especially the rise of agents is going to kind of take away the front door of the internet. So agents don't go to booking.com. They don't go to Expedia. They just do all of that behind the scenes. And I know you heard from some of those folks. What was sort of the defense from the software companies that the market thinks are vulnerable?
Yeah, I think they would start with the fact that, look, AI doesn't kill software. I think it's reshuffling it. I think the displacement is going to take time. And I think the real winners here are going to be the platforms that, embed AI, into the systems of record and really not replace them. I think a lot of the discussion over the last 3 months and going into the next 6 to 12 months in software is going to be, what are going to be the characteristics that define true competitive moat for a software company. And there are a lot of different companies that talked about things like, proprietary data. Do you have a network effect around your company? Do you have things like vertical domain expertise? Do you really have a really tight relationship with any given vertical? Can you bundle products together? And then, Deirdre, every company was really talking about, is the function of your software, is it deterministic or is it probabilistic? So I think, here at Morgan Stanley, sure, I use Copilot to maybe summarize a meeting, or if I'm meeting with a CEO, it'll give me some notes. But look, if it's wrong by 2%, that's not going to kill my meeting. But if you are actually calculating payroll, if you're calculating the actual taxes on a product that you're charging or sending an invoice to a customer, that's a deterministic application problem. And because of that, that is going to be difficult for AI native companies to just replace. And it's really going to be more the incumbent software providers that have 20 years of expertise that have the advantage.
Right. It's like that zero tolerance for error, right? Unlike a chatbot, which you can kind of check. I guess, that seems to be the line that we hear from many, many software CEOs right now. They have systems of records, or they're so integrated. I always push back because that's changing. We've seen this year how quickly that changes, right? I mean, a few months ago, I could never vibe code anything close to a Monday.com replica. I still can't, but it's a little closer than it was a few months ago. So you just think 6 months from now, 12 months from now, 2 years from now, how do software companies sort of defend their businesses against just a technology that is accelerating at this wild pace?
Yeah, I agree. Yeah, I mean, not every company will be a winner. I think, if you're providing a basic user interface and just translating what used to be a manual function onto a website, that was amazing technology around SaaS maybe 5 to 7 years ago, but that's not going to be sufficient today. If your main application is to take public data and then organize it and then present it to somebody in a SaaS interface, that's also probably not going to be sufficient. So I think, to your question, it's going to have to be, a lot of these companies are reinventing themselves. It's wartime, not peacetime, for those companies that perhaps you're mentioning. And, I'm actually seeing, a complete redesign of the back end of the company to be, quote, AI native. And frankly, from a leadership perspective, Deirdre, it's an interesting one where, I think boardrooms, a lot of my board discussions are like, hey, who's the CEO? And is that CEO someone who has sales and marketing knowledge and background, or is it more of a product-oriented CEO? I think in wartime, if you're one of those software companies, it is better to have someone who actually has a dynamic and deep sense from a product perspective leading that company.
Oh, that's really interesting. I also want to mention Jasmine. Producer Jasmine coined a phrase this morning. We've moved from software as a service, SaaS, to software for agents as a service. And we got the idea from Aaron Levy, the CEO of Box, yesterday, who said that, agents are now his new customer base, and he could see that being 10 times as big as his existing one. So we talked a little bit about that this morning too. The nuance between being like the front door or the interface of the internet versus being the plumbing is another interesting way of looking at it. You mentioned wartime versus peacetime CEOs. You had two very much wartime CEOs. Very big newsmakers at the conference this week. You had Dario Amodei, Anthropic CEO, on Tuesday night, right? And then you had Sam Altman, who was a last minute addition this morning. Who are people most excited for? Who got kind of the most chatter coming out of the session as well, or both?
Interesting question, Deirdre. I think they were both equally well attended, just because of what both of them are bringing to the marketplace. I thought just this morning, I think Sam talked about some interesting concepts just around, the future of work and kind of how humans will interact with AI. He basically was pretty direct that he's not a doomer when it comes to jobs. I think he said humans want to see humans, and so I like when he talks about the idea that you can have in a few years you can actually have a $1 billion revenue business run by 10 people, and so just the amount of productivity that can come from using advanced technology like this is super interesting.
And Dario's kind of the other side of that coin. He's made it sort of his brand to be a little bit more doomsday-ish. Of course, all of this is happening as the drama's playing out in the background with the Pentagon and even the White House labeling Anthropic as a supply chain risk. I guess from your perspective, Dave, because you're in technology investment banking, does that complicate an IPO? I don't need to tell you if or when they are going, but let's say they do, both these companies want to go public this year. Start with Anthropic, something like that kind of designation being a supply chain risk. How does that complicate that path?
Look, I think whenever you're looking at IPO characteristics, relative to CapEx, supply chain, customer concentration, and the ability to drive durable growth, I think there are puts and takes to any given business, even the ones that you just mentioned. But I think both companies you're mentioning have very bright futures and the ability to go public very successfully.
Yeah, huge amounts of revenue and losses. Let me ask you just kind of a question I want to know for fun. Was the Morgan Stanley crowd Claude pilled? Are you Claude pilled? Everyone's talking about it this year. It's jumped to the top of the App Store. I've switched over myself. Who knows if I'll switch back? But I just wonder if what's happening here has sort of reached Wall Street.
Good question. Obviously, I can't speak for everybody, but I can certainly say that we see innovation and we appreciate the opportunity that both vendors are bringing to the market.
You're being too diplomatic. What's the chatbot you're using these days?
You mean personally?
Yeah.
Yeah. Personally, I like to use. I actually use a little bit of ChatGPT. I've actually just started doing a little bit of Claude co-work myself over the weekend, and then I actually use a little for Perplexity as well. I like the user interface. How about
and
yourself?
you had our end, the Perplexity. See, I used ChatGPT sort of religiously for 3 years, and I've been open about this. I switched over to Claude a few months ago, started playing around with co-work, and have not looked back. Doesn't mean that, I'm agnostic. I'll go to whatever platform, whatever model works best, but I have just found Claude to be really this great product for a number of different reasons. Not that what's that?
What's the most advanced application you've done with Claude co-work personally?
I've built sort of products that I've always sort of dreamed of having. They're kind of silly too, like something that tells me when a stock hits a certain level or market cap. I've vibe coded something that works for my schedule and can pull from my calendar, my Gmail, and I find that really useful. But just on those are things I'm just playing around with, but on a daily basis, I just prefer talking to the chatbot and working with the chatbot. I feel that it's less it pushes back. That's one of the things that I really, really like about it. And I think ChatGPT is going to get there as well. But it feels more like a collaborator than before. So yeah, I don't know. I reserve judgment. I'll keep trying them all out, of course. But right now, certainly on Claude. Dave, we're getting some questions on YouTube. Keep them coming in, by the way, about infrastructure. And this is a good one. You were talking about this a little bit last year. We've been talking about this for a long time, but the numbers just keep going up and up, nearly $1 trillion from the public mega caps, $1 trillion plus from OpenAI. How's that being interpreted by Wall Street right now?
You mean the hyperscaler CapEx spend? Yeah. I think, look, we're in a historically massive AI infrastructure build out. I think the positive spin for me is, one of the reasons people are asking about this is, hey, what's happened historically? And I think, unlike the bubble from the early 2000s, where we had a massive outlay of spending, and then when the sector overheated, the companies that were left holding the bag weren't really well capitalized and then ran into a lot of trouble. I think here we have, massive companies with, A-rated investment grade ratings, and also with very significant base operating businesses, whether it's search or many other different businesses on the enterprise side that are producing massive free cash flow that can support the additional debt that they're raising. So I think in general, investors have taken, certainly we saw the pendulum swing just this week from Monday to Thursday. I think they've gotten more cautiously optimistic given the trajectory of advances in AI, and for what AI can do for consumers and enterprises.
More optimistic because they're on the ground here, seeing sort of the leaps and hearing from the CEOs, the progress that's really interesting. The free cash flow argument, the pristine balance sheets, that's always been made, but that is changing. I mean, Amazon will be first probably to turn negative. Meta's running down its free cash flow. I mentioned at the top, Google issuing 100-year bonds. That's really changing. Does that make you more nervous at all? Should it?
I think the reason it doesn't make me nervous is we're just scratching the surface from a demand environment perspective. Like, I think we're still in the first inning of agentic enterprise AI adoption, and one of the reasons I think we're still waiting for that real AI adoption is the ability for the AI platform to get it right. As I was discussing before, I think most companies are still using basic use cases like code assist, search, and summarization of a sales call, for example. But there's so many critical workloads in an enterprise that can't afford to be probabilistic. And so we're just in the first innings of having the right kind of AI stack to be able to harness the best out of these LLM models to actually drive real deterministic outputs. And once we do that, we're going to unlock billions of dollars of value within the enterprise, not to mention all of the consumer behavior change and value creation that's happening. So that's what makes me optimistic.
It's kind of like Jevons paradox, right? And then that inference side of it, it's just going to keep going. Actually, let me get the question right. So this is from John, and this is more direct. Do you think there's going to be more or less spending on infrastructure in 2027 versus this year?
Looking at the current forecast of the Mag 7, I would say probably a similar level next year then versus this year. Right.
So maybe it's peaked out. I don't know if you can answer this. There's another question, and this is infrastructure related. Will Broadcom be able to survive the AI chip race? But it feels like it's really got the wind under its wings at the moment.
Broadcom has been doing quite well. I would say just the semiconductor value chain in general, semiconductor, but also just I think this massive surge in kind of AI compute has just created a ton of bottlenecks in the overall tech supply chain, and that's also one of the main themes from our TMT conference this week. And you've turned what used to be slightly less popular segments in tech to just massive star performers. So I think investors are kind of saying, hey, where are the real picks and shovels where I don't have to necessarily bet on any given AI application? And so you have memory, hard drive suppliers, optical networking firms, semi-cap. Those are some of the biggest winners right now over the last 12 months.
Yeah. It's kind of the part of the AI trade that has been holding up, where there's been nervousness, feels like many other places. You're a deal guy, Dave. So, I love talking about like the characteristics of the deals that we see in this AI era. I was talking last night to someone about the AMD deals that it's done with Meta and OpenAI. They looked like almost identical, giving up between the two of those deals 20% of its equity. like, where are we? What do you think of these more creative, call them circular deals in this AI era?
Yeah, I think what's happening here is it's really just an exchange of value. And if you're right now, it's all driven by an intense need to lock up supply of compute, and you have lots of shortages relative to who's actually supplying that compute.
But hold on,
the energy.
If you have to lock up, if you have to lock up compute, though, then why would AMD have to give away 10% of its company to each? Shouldn't that be the other way around?
I think I think AMD also obviously is looking for a value in the other ways around. So I think there's locking up compute, and then obviously AMD has had a lot of success in terms of moving from one product set to really leveraging AI as a massive tailwind. And so I think they need to, in order to do this, they actually need to compete heavily to lock up the customer side as well. So there's value exchange on both sides. Yeah.
Okay. Dave, last question for you. You're almost through this week. It's always such a huge lift for you guys, and great guests. It's been great to actually be on the ground covering it. Any predictions for next year? Where do you think we're at? Where do you think the market is and Wall Street is at on the AI trade?
I think the prediction for next year will be that we're going to see I think certainly starting with enterprise software, I think we're going to see a rebalancing of the winners and losers. And I tend to be very optimistic about 2 or 3 segments that we talked about. We talked about some of the characteristics of what drives a competitive moat. And I tend to think there are a number of different segments, for example, cybersecurity, that have all of those characteristics and have a lot of room to run in terms of being AI beneficiaries and not being threatened. And then I think the second one would be there are some super interesting next gen companies in the semiconductor and system side, people that are actually really trying to come at the problem very differently in order to, in a first principles way, solve the underlying issues we have with things like connectivity at the compute layer, energy. And so I think we're going to see some super interesting next gen companies come onto the scene in a very vertically integrated way.
Yeah, you already had some this year too, some sort of the AI native darlings that were represented at Morgan Stanley's this week. Next year, do we have a public pure play AI lab?
I think many of those companies have the ability to go public given the amazing franchises that they've built. And so that's certainly possible, Deirdre.
What about the losses? Able to go public with billions of dollars in losses, gross margins?
Given the TAM and the opportunity and kind of the scarcity value of what they've built, I think absolutely.
Well, Dave, thank you so much. It's always great to have you and get your input. Enjoy the rest of the conference. And thanks again. Thank you as well to Morgan in the control room, Jasmine, my producer, Robert and Evan behind the cameras. Thanks everyone for watching and commenting. See you soon.
Yeah. Morgan, you have the greatest name.